This is our Forex blog for April 3rd, 2013, and one of the easiest ways of trading is using our actual currency indexes. We statistically compare the dollar, all the dollar pairs, all the euro pairs, and come up with a chart that shows very clearly what its trend is, the previous day's high in dotted green, the point of control of the previous day, the previous week's point of control, and a ton of other information right on the chart. And basically, you want to buy the strongest currencies versus the weak and sell the weakest ones versus the strong. For 6-7 years, our main focus was to actually come up with statistical models and show each currency in a histogram form. The problem with histogram forms is you can't draw a trend line on a histogram. You can't see double tops, double bottoms. You can't find wedge patterns, flag patterns, reversals, Fibonacci retracements of one individual currency, not a currency pair, just one currency. So let's just, now that you get an idea of this, this is the first time you've seen our charts. We have the dollar on the top, the daily and weekly trend underneath it, and basically the daily trend was up, the weekly trend was down. It was unable to get above yesterday's high today, broke down underneath the weekly point of control, broke down underneath the hourly moving average, and so that's a very big sign that this currency is going to go down. You want to find a currency at 3 that is the strongest to be either buying or selling the dollar against. Well, clearly the yen is quite strong at 3. It's been going sideways, and basically anytime you have a currency that's in a very tight rectangle pattern, when it breaks out of that, that's very strong. It's a trend that's likely to continue. The euro's weak. The pound is also getting strong. Now the only downside with the pound is, as you can see, the daily and weekly trend is down. The CAD is going sideways, can't get above the previous day's high, and breaks down underneath the hourly. So even though the daily and weekly trend is up on this at that time, it's likely to go down. The New Zealand, it broke out from below to above its hourly. It's in a nice little range for an hour, and it's pretty likely to break out to the upside. The Australian, same thing. It's at the previous week's point of control. You can see that the point of control went up 42 pips from the previous week. You're going to want to be watching this. So the best trades at 3 o'clock, if you're watching this live, and this is what it looks like live. You only have the right edge. You don't know what the future is going to hold. The highest odds trade is New Zealand dollar buys, Australian dollar buys, and the dollar yen sell, because the dollar's falling, yen's going up. The yen does have a very strong weekly trend. And then the least odds trade is buying the pound dollar. So let's take a look at those trades right now. I'm going to move the range chart out of the way, and you can use any kind of minute-based charts, 2-minute, 5-minute, 3-minute, even a 1-minute. You can use a tick chart, 30 ticks, 35, 40, 45, 50. You can use our range charts, which are a certain number of pips per bar. But again, we're going to focus on the highest odds trade, which is either the Australian dollar buy or New Zealand dollar buy. And personally, I like the New Zealand dollar buy. If I had these two choices, I would buy this one, because if it does break out, the previous day's high is up here, and it's a good distance away. And if it does make it to that level and the dollar continues to fall, you're probably going to make 20 to 40 pips or more. The Australian is right underneath the previous day's high. So until it breaks out of that, I really would prefer this one. The pound, the daily and weekly trend is down, so I'm a little bit hesitant to buy that. So we'll start off again with the New Zealand dollar. And this is coming up to 3 o'clock, by the way. So we scroll back at 3 o'clock. And as you can see, this currency was underneath its hourly moving average. And typically when a currency is underneath the hourly, you want to look for sells. Above the hourly, you want to look for buys. But the New Zealand pair was pretty much by itself going sideways. The dollar just broke down right at 3. So basically, at this point right here, we're kind of waiting for it to go above this high, and then we're going to put our stop right here. We're risking less than 10 pips And so if you drew your fibs from here to here, you have a profit target up here. And I'll just showcase that as we go forward. Your profit target, and usually a strong currency versus a weak one will at least go to the 1.618. So you have a good chance of making 14 pips or risking less than 10. And sometimes, you know, obviously it goes past the 1.618. So we're going to scroll forward and see what happens here. And all right, so we're in right here. And I'm going to put a stop even tighter than that, right underneath the hourly. This should pop up here. If it doesn't, I'm going to lose 5, 6, 7 pips max. All right, and at this point, I'm already moving my stop to break even because it's really close to the first profit target. If it stalls here, I might exit half, but it's not enough pips to really make it worthwhile. You can see our perfect oscillator is overbought. So at this time of the day, what that's telling you is it's gone up a considerable amount of distance. And for this time of the day, it's probably more likely to reverse and continue. So we're only up a few measly pips in this. But you might want to get out of half the trade if it goes underneath this bar's low. So we probably would have got out of half the trade here at 24 and the other half here at 31. So you made about 10 pips on half and maybe 5 or 6 pips on the other half. We only netted 7 pips. But it was a profitable trade. You know, not all trades are going to be super high win. And again, when the currency pulls back, a lot of times you can buy the pullback and the next wave is more likely to go. Remember, this one also kind of creeped up 15 pips before it moved too. All right, 38% pullback. I would prefer it to pull back to the 15 area here and this show a minus 80 reading. If it goes sideways there for a little bit longer, you know, you can consider buying a breakout right here again, and the upper containment bands are your next profit target. So the next trade is even a higher odds one because it's got a pretty good chance of making 15 pips while risking 5 or 6. All right, so you in the trade here with your stop underneath there, and I'm moving my stop up, and you're going to use trailing stops in this as well, but we're not. We're going to try to keep it simple. You can always move your stop up underneath the sideways consolidation. Now here's the previous high. It's not able to get above there. Now at this point, you know, usually they kind of run out of steam at the first bands, and you might want to draw your fibs where it kind of stalled. It's at that fib target. I'd probably exit half here just because, you know, you're up 14, 15 pips on the first half. Most of the time it doesn't go above the 1.618. And you're going to put your stop underneath this low right here. And it hit the 1.618. I'd just get out of that trade there. It's probably going to pull back before continuing up. So it really only went up a little bit farther. But you get the feel for how you trade this. Small win with the first trade, much bigger win on the second trade. And so let's take a look at those currencies again. Remember, at 3 o'clock, the pound, we're looking at the Australian. Let's scroll forward on this chart. If we see the Australian breakout, we want to get in it. Never really does until a little bit later. Maybe at 5 o'clock, the dollar's still trending down. So maybe at 5 o'clock you are really heavily looking at Australian dollar buys. And again, 5 o'clock. Now this one's pretty much went in a really choppy phase up. I'd like to see at least a 38 to 50% pullback. And a lot of times a range chart is better, or a tick chart is better for this. Not much of a pullback. I really don't like to buy these, but it definitely appears that this is all the pullback you're going to get. You can do a tinier position than you normally do here if you want to get into that breakout. And I'm having a super tight stop, maybe risking 5, 6 pips at the most. Alright, so this one took off. I'm moving my stop up pretty much near break even already. Here's the upper containment band. It went up 10 pips. You might, on a risky trade like this, want to take half of it off with 10 pips. And you're moving your stop up. If it doesn't break these highs, you're going to make 7 or 8 pips on the second half. Alright, so we probably would have got this trade right here at 84. Not the biggest profit in the world. And again, let's look at the 3 o'clock pound breakout here too. And also the yen broke out as well. We'll take a look at the dollar yen. Weak dollar, strong yen. We want to sell it. I think it was after 3 o'clock. We're looking for sells. So as you can see, this trade didn't initially work. Right here it's at the hourly moving average. It's showing that it went down too much. So perfect oscillator can actually keep you out of some unnecessary losses. So if you did short right here, because the perfect oscillator is down too much, you're going to have a super tight stop on this. There's no reason to risk. And you might also want to trade smaller lots. And you can see it's not really fallen off. You got into it at a pretty low place. Probably we might have been short at 93.41, and you're out. So you can see you might have lost 2 pips on that, 3 maybe max. And we're looking for this. If you can get back above the hourly, that's not good. You're looking to sell it. Obviously, as we scroll forward, you can see the yen, which took off, fell back. But it also found support right at this level. So, and then it went underneath the hourly. And that's why the trade didn't work. If you were watching this live, the fact that it took off and the dollar was kind of going sideways after the breakdown is why that trade never really panned out. Let's look for some anticipatory type trades that you can do. The pound earlier went from underneath above the previous day's low, went above the hourly here. It's holding support at the hourly all day. And you can see it's in a nice low volatility pattern like this. Breakout's very effective when that happens. We have the Swiss going up at that time, the Australians above the previous day's high, the New Zealand strong all day. The yen is now underneath its hourly, and the dollar is as well. I would prefer to buy these kind of breakouts when the dollar has also kind of gone up and is more likely to go down. You can see it's at the low of the day here, so it's a little riskier trade at 8 o'clock. And I'm trying to show you how to anticipate future moves based on this. So let's look at the pound dollar at 8. Here's we're coming up to 8. This one had just made a move up. You really, and this is really a perfect case of using the range or tick charts. This is I don't like this chart at all at this time, so I'm going to drop down to a faster time frame chart, tick based or range based. So let's just put a 50 ticks per bar for the pound dollar on here. We'll put 2 days. Okay, we'll scroll back to 8 o'clock. Whoops. There's 8 o'clock. If you take a trade on a much faster tick-based chart, you can get in with very, very tight stops. And obviously the previous swing high is a possible place for it to stall. If it can't get above that, you already got your stop at break even, and you might even move it up a little bit. You also can see kind of a choppy move up here. So if it does take off, you have your fib target above to look for, and this is a premature fib area. If you take a risky trade and you want to get out of half of it with 12 pips, that's all perfectly okay. And when it kind of goes sideways, I always move my stop up underneath here. The next fib target's really close to above it, maybe 51.45 to 50. Now it had plenty of opportunity to pull to explode up. I am moving my stop up, and I'm going to get stopped out right there. It's probably going to go up after that without me. Yeah, a little bit later. You can see a 50 tick chart allowed you to take a trade that looked absolutely horrible on a 5-minute chart. So let's take a look at a 5 pips per bar chart at 8 o'clock. You can also see patterns on this. 8 o'clock, you get your pullback. You have a bar that goes down followed by a bar that goes up. If it goes above that bar, you get in. Put your stop right here. And again, you can use trailing stops on this. And keep in mind that the pound and the dollar are both weak longer term. You really want to get a currency that's strong in going up today. It's going up today, and it has a daily and weekly trend that's up. And of course, you want against the dollar, who's weak on all time frames. That's a much better opportunity. But you can see, how this panned out, and you can also kind of see up down bars. These are 5 pips per bar. Move your stop up here. Didn't really make that much at that particular time. And usually, if it goes up down like that, it takes off. If it doesn't, I'm going to try to get out near the highs. So I might be out right here at 35, or if it goes a pip below, that bar's low. So I'd probably be out right here at 35. Let's look at some other ways of view. One last way of looking at this today. The euro exploded up, pulled back, double bottomed at the previous day's low, broke out this trend line here on the way down. So at 8 o'clock, we'll consider buying the euro. Now, what's the weakest one at that time? Well, the pound's going up this time. The yen has been trending down all day, and it's finding resistance here at the hourly moving average. And it did break the previous day's low. If it takes off to the downside, you're going to have a very good euro yen buy. So let's take a look at the euro yen at 8. We're looking to buy it because it's breaking a trend line. So we're coming up to 8. And this is probably where it broke the trend line. It might have been a bar or two before 8. And you have to put your fibs, the last move was a down move. So this may not go back up to the highs. It may not make higher highs than this. It may only go to the 50 or the 62% retracement. If it shoots through the 50 and 62, you have a very good chance of it going to the high. All right, so if it can't get above the 61.8% fib retracement level, you might want to get out of half your trade there. All right, so you would have got out of half your trade there and put your stop underneath it. Keep in mind these are 5-minute charts, so you're in this trade 5, 10, 15, 20, 25 minutes. This is another perfect example of why you want to use other time frame charts for timing. Let's take a look at this one. We'll start with I'm going to put a 50 tick on here at 8 o'clock. Okay, so I guess it was a little bit before 8 that broke the trend line. It might have been this level right here. You buy that breakout with your tight stop. You can see it kind of worked its way up about 10 pips. I tend to try to take small wins on my first half and let the second half run. Just to, a lot of times that's all you're going to get is a small profit. That's the most there is. So we're probably only making about 8 pips on this, and then when it pulls back, I might have got the second half here at 90. Let's take a look at a 5, or you can even go down to a 4 pips per bar range chart. These bars are 4 pips big, and so every time the market moves 4 pips, there's a new bar. And you can see, how this looks. You buy that breakout here, it goes up. You also see the fib target on here. It went right to the 1.618. You can put your stop 1 pip underneath the previous bar's low, and you're out of the whole thing. That's typically how I trade a range chart. So I would have been in here at 83 and out at 94. Take the spread off that. Depending on the broker you're with, you have 6 to 9 pips on the trade. Maybe not the best day today because the market was kind of choppy, but you can see easily identifiable patterns, double bottom and a trend line break at the previous day's low of the euro. Now the only downside with this is the daily and the weekly trends down. The daily and weekly trends up, this is very likely to give you 20 to 50 pips. You're trading against a longer term trend. And that's why most traders lose all their money trading Forex. Everyone knows to trade with the trend, but what trend? Today's trend, the last day or two trend, the last week trend, the monthly trend. A lot of times they're all going in different directions. The monthly trend could be down or up, the weekly trend could be down, the daily trend could be down, but the currency is actually going up right now. So what trend do you use? Well, at least you can see with our software all the different time frame trends for each individual currency and put together the ones that are highest odds.